Fear is in the streets and it's showing on the chart. My name is Coach Brian. I am with the KDT Institute. We do institutional futures trading. What we're going to be speaking about right now is looking at the VIX. It's a volatility indicator and it showcases what's actually going in the market. We're going to zoom in and I want to show you at the peak of where it was very high. Anything above 30 is when it starts to get a little bit turbulent. It starts to showcase that investors are concerned that things are changing. And so I want to zoom in here and show you at the peak of when we went to war with Iran, look at how high it went. And so that's going to be the yellow circle. Let me just change that arrow to white. You guys see it? It went to a high of 35.30, 35.30. And now it pulled back. So let me show you the pullback. This is when we said we'll probably be out there in about 2 weeks, right? It went down as low as 2028. So you see the extreme, right? 35.30, high VIX, basically saying, it's almost a panic. It's fearful. What's going on in the industry? And then we see a low of 2028. Investors heard that we'd be trying to fix what's going on, having a resolution with Iran. And now we're sitting at 26.96. And what's significant about that, it's showing what's really going on. And so if you're watching this today, I want to showcase to you that documentation beats conversation. We can watch talking heads online. We can have people tell us all the different things, but we need to look at the fear gauge, and it's showcasing to us what's actually going on in the markets. Now, there's many headlines today. I'll pull this one up, and I think you guys will appreciate this one. And I put that the Fed is stuck. Stagnation fear grips Wall Street. Oil is above 114 a barrel. CPI 3.25% risk forecast. GDP 1.6%. And we're seeing all of these micro and macroeconomic factors are affecting what's going on in the market. And it's very important for us to understand that as we're trading, it's never just the candle. It's never just one thing. It's a series of things coming together. Now, if you want to get information on what is the VIX, what does that look like, I can put some resources out here. And so let me go ahead and share my screen. And you guys can see this. It's right on Barron's. It talks about that the VIX fear gauge is rising again, and the calm didn't last long. And I just like to showcase this because you have to almost get a paradigm shift to see what's going on within the markets itself. And so after this, I'm going to showcase to you what is happening in the various of different markets. And regardless of what's going on, believe it or not, you can still make a profit in these markets. So let's actually go to the charts right now. I want to go to let's go to the S&P 500. So that's going to be the ES. And I'm going to start off on a daily chart. And we're going to see what's happening from the day. So just check with me a little bit. So yesterday's movement was this green candle right out here. Do you see it? So if we looked at yesterday, it's going to be that green candle there. Now, what I'm going to do is actually draw the high and the low of that candle. So that's what the white lines represent. And it looked like things might be starting to turn around. Fair enough, right? You're looking at it. You're seeing that the market went up. Buyers were coming in. There was a structure. But right in this area, without you even knowing it, there was a bunch of selling going on. And so what we would have told our traders, if you're going to be knowing how to do this, is don't read headlines, read structure. And what this structure is saying right out here, there was a bunch of selling going on. Now, this is a day time frame, and with the markets on how they're acting right now, is you can't hold positions right now. You literally are going to have to start scalping, looking at a 1 hour time frame, a 15-minute time frame, maybe enter on a 5. So I want to zoom in and go a little bit lower just to see what the market is actually saying and if there's any chance that we can find some profits in the market. Now, if you look at this time frame, I'm looking at the 1 hour, and I do see a gap in the market. Do you see that, right? There was a gap right out here. So I want to put a yellow circle around here, and then I'm going to turn on an indicator called no gap candles. What I like about this shows me the intentions, and it fills in the gap. So watch what happens in the yellow circle. Boom. What do we see? We see an extreme movement in the charts. Buyers came in, watch this explosive move to 66.39, and then it dropped from 66.39 all the way down to 65.67. And when that happened, that left a bunch of unfilled orders, which, if we look to the left over here, there's a terminology called a fair value gap, and it was right within the gap. So watch what I'm going to do. I'm going to mark off this area. And what we're doing right now, this is technical analysis. We're reading candle structure, and we're identifying areas that the institutions were buying and selling. Yep, we're identifying those areas. Why is it important to identify those areas? Because we don't want to be chasing the market. We want to identify areas that if there's an imbalance, we can get in the imbalance and possibly lock some profits. Now, here's what we're hoping for as we're doing this, right? We want to find trades that have high probability, low risk, and high reward. Does that make some sense? So that's what we're shooting for. Now, do me a favor, right? If you're watching me, you're getting any value at all. Can you do me a favor and just put a 7 in the chat? Just give me some hope around here. Just let me know that I'm not just speaking to myself. Give me a 7 in the chat if you're learning something. I know I'm streaming this to LinkedIn. We've got this on Facebook. We've got this on YouTube. And I'm doing this day to day just to get this out there, show what the company's doing, but just show the possibility of making money in the markets despite on what's going on in the world. Does that make sense? So track with me a little bit. We're in this area where they have a bunch of buying going on. And so if we're in a buying area, we never want to be selling here. Does that make sense? We only want to buy where we should be buying and sell where we sell where we should be selling. Whoa, that was a tongue twister. Now, as I zoom in here, I'm going to go from the 1 hour to the 15-minute. And I want to see, is this a possible area that I can find some trades? Now, let's zoom in here. We see that there was some rejection on this candle on the 15 minutes. It was also at a place that they had something called the fair value gap. And when we look at this candle structure here, we see that the buyers came in, sellers faked it to the head side, and then it dropped. So this could be an indicator for us to look for a short, which makes sense. And if we're going to short on this one, we would want to find a short-term scalp, okay? Meaning that we want to get in and out the markets. Now, let's look at it. Let's just say we did one contract, nothing too much, and we're looking to grab some points. You guys see it. So the first thing that I want to have in place is I want to have proper risk-to-reward ratios. I also want to be able to set myself up that if it's in profit mode, I can grab price quickly, but if I'm wrong, I lose quickly. So let's just look at account size so we can get context, okay? So right out here, we had an earlier trade. Let me see if I can pull this up. And if you guys can see it at the bottom, we're already up 421 on one. So let's just go ahead and close that one off. And then we have this current trade where we're down $50. So that's a good deal. Now, another thing is we want to use the right tools, right? Because the right tools can help us stay in the trade, but then have the proper stop losses. And I'm very big on have a proper system in place. So let's just watch the tools on this one, right? So the first tool I want to use is a short position tool. And that lets me know, and I can actually take a trade from this, but it lets me know if I have a trade that has high risk and low reward. So currently this trade is producing a 2-to-1 risk to reward ratio. I want to go a little bit bigger than that, maybe a minimum of a 3-to-1. So I'm going to adjust this down, and I want to put myself in position that if I'm right, I can make some serious money, but if I'm wrong, I lose quickly. Give me the 7 in the chat if you actually like that idea. Yeah, we don't want to be chasing price. We want price to work for us. And so notice this area we're targeting at the bottom. If we're right, 1187.50. This is one contract. And if we're wrong, we'll just lose $425. Now track with me. As we're looking at this, another thing that we have to pay attention to is this. We have to look at account size because account size is going to let us know what we can risk. So this is an account size of 124,000. We can risk up to 1,240, and that's just 1% of the account. So if I lose 425, that's almost like a 0.2%, not even a full percent of the account. Now, the times that we're in right now, clearly we're in a downtrend, but we want to find out how long do I stay in it. So look at what's going on right now. We're having a little bit of a reversal to the downside. Right out here on this part, we see that the market broke below this low. You guys see it? Retested in the area. That's what's going on right now. And so we're trying to find out, is this a big fake out? So why would we even want to enter here? Let me show you why. Whenever you see a fair value gap, which is right in front of us, you want to be able to enter in the gap. Does that make sense? So this gap right out here in the purple is the gap. So we want to be able to enter there somewhere. That's why we're getting a little bit of rejection. But typically, we want to have that stop loss right outside of this gap. So if we're wrong, we just lose quickly. Does that make sense? And that's one thing that I tell everybody in trading, and especially the times that we're in right now. There's no longer can you go out of here and just say, listen, I'm just going to hope things are going to get better. I'm just going to play this. No, hope is not a strategy. Literally, you need to be able to get in. If you're wrong, take the L, look for another trade. Does that make sense? And I like to say that because a lot of times we can be very methodical when it comes to trading. But here's what happens very, very often. People get emotional when it comes to money. And we get emotional because we don't want to lose. We get emotional because we have an ego. We get emotional because we've lost before and we're revenge trading. But watch this kingdom mindset. The kingdom mindset is God has called me to be a good steward over the resources that he's given me. And so if I look at this setup, whether I win or lose, and there's the paradigm shift. The paradigm shift is whether I win or lose, as long as I follow my system, I'm considered a success because I predetermined what I was willing to win or lose. Put a 7 in the chat if that's making some sense right now. I just say that because we've got to get to the place that we're not just hoping and thinking that things are going to get better. We've got to have a system in place, and the system is what's going to be able to allow us to be good. Okay? So we've got this in place. We don't have to stare at it. We know worst case scenario, we lose $425. Worst case. We know best case scenario, we have a 3-to-1 trade. We win $1187.50. We're doing one contract. So notice what I'm doing right now. I'm not just jumping in and taking crazy trades. I'm looking at setups. I'm willing to take a trade with proper risk management, and it gives me the freedom to go in and look for other setups. Okay? So let's go back to this. I want to explain this one, and we'll pull back. Okay? So when we talk about the Fed being stuck, another thing that's going up is we're going to see gold changing, right? And we're going to see gold changing because of the uncertainty in the market. So what I'm going to pull up next is I'm going to look at gold today, and I see another beautiful setup. Let me go ahead and flip it around for you. And one thing we have to understand is if we see gold coming up like this, it's coming up like this because there's uncertainty in the market. So let me see if I could do a little bit of an overlay for you. And what I want to do is actually put the VIX over gold. So watch what's going to happen. Remember, VIX was the fear factor, right? And so on this fear factor, let me see if I can go ahead and search it right quick. We'll type in VIX. And we want to come out of the CBOE. Yep. We're going to click it. And look at this, folks. Let's explain what's going on. So clearly you see these big blue lines. Like you cannot unsee this, correct? It's showing you that fear is increasing, and at the same time, gold is increasing. So sometimes we could look at different setups and see if there's an overlay, right? The VIX is looking at the S&P 500, but watch this. When there's so much uncertainty, you can see where investors are starting to want to move their money. So let's zoom in here and let's just say we wanted to trade gold, right? We want to be able to trade this asset. We see what's going on. Watch this. I'm just going to do one contract on gold. Watch this. I'm going to show you actually how to use this. We want to do a long position. Yeah, we'll put that right here. We want to see if we can target this area, and we want to put that risk real small so that if we're wrong, we lose quickly. Now, remember, as I'm looking at this as a scalper. Does that make sense? As a scalper, meaning that I want to get in and out the market very, very quickly. Now, also, let's look to the left over here, right? Let's look to the left and notice this area. We've been there before. We can see, is this an area that we should target? So let's just look at in the middle of that area. That's 47.32 an ounce. Let's say if that was our target, we can possibly get almost a 4-to-1 to 3.5-to-1. And I like to target about the 50% area. I mean, if you can look at this with your eyes, if we went from here to here, that's about the 50% area. So let's just say I targeted that, okay? So what I'm going to do is I'm going to do a right click. I'm just going to get one unit just for the sake of trading today. And if we're right, we can win $7,880. And if we're wrong, we lose $2,150. Now, I want us to really think about that. Isn't that a pretty good risk to reward ratio? Because at the day, right, you don't want to be tying so much of your money. But the reason that we're targeting this, watch this. I'm going to draw it from the bottom and look to the top. So if I came from the top up here, clearly there was a bunch of selling that happened here. And you can see this just by the size of these candles. Like you cannot unsee it. This is a major footprint. I'll put a yellow, eclipse around it. And let me know if you see that, right? Let me know if you see that big, huge red candle that came out of nowhere. Yeah, let me know if you saw that. And then also, let me know if you see this as well. Let me know if you see this area where it dropped, kind of faked a little bit, and another major drop. Let me know if you see this, right? And so this is showing there was a bit continuation of sell-offs and sell-offs. And notice as it got to the bottom right out here, notice this, that this was the area where there was some major buying. And so look what we just did. We basically have set up where we should be looking at. We're looking at where the institutions are buying and selling. And then from that, it kind of gives us a gauge of what we should be paying attention to. Are you tracking with me? Now, one thing I'll say about gold, and let's just look at this one, right? We've got one contract. We're down 630, so that's why we have a relatively small stop loss according to what we're looking at. But if we zoom in here, we can see that it's a little bit stagnant, but we should have it where it pops off. So again, the most important thing, if you're going to be trading gold, you're going to be trading NASDAQ, is you have to understand how it moves. Now, let me show you something. And look at just small moves can be monumental here, man. I was seeing something in the prop firm space. There were people that were making $30,000, $40,000, $50,000 off gold. But those numbers sound good. But can you handle the risk? Can you handle the pullback? Very, very different. So let's look at this right quick, right? If we lose, 2150. If we're right, we're shooting for the stars, 7,800. If we wanted to, we could put another take profit right around here. And I don't know about you, 2470 is pretty good. But why did I not start there? Because typically, if we're going to be taking a trade, I want to get a good risk to reward ratio. So it's got to be worth my time. I'm not just taking some random trades. Does that make some sense? So let's jump a little bit, right? Let's see what's going on that's causing these movements. And this was on Bloomberg. And it says U.S. strikes, Karg Island as Trump repeats threat to destroy Iran. So very, very turbulent times that's going on right now. As traders, there's a lot of people that don't know what to expect. And you know what I've been telling people? You could watch these news, you could be in fear, or you could position yourself to say, listen, man, I'm looking at companies like NVIDIA, Microsoft, Apple. All of these companies are on sale right now. And this could be the very time that I either purchase some stocks or that I trade from these lower positions. Let me show you something. So we've got our gold trade set up. We're pretty good with that one. We'll go back to ES and see what's going on with that. Okay, so we got that in play. Okay, so we're down 710. Okay, and then let's go to Apple right now, right? So I want to go ahead and look at Apple. And I want to see, is Apple on sale? Because the whole market's been down. Track with me. Apple is sitting at 24.47. This is on a 1 minute. Let's go to a 1 hour and look at this, folks. My gracious. Does anybody see this line right here? Let me just ask, if you could have caught that move and got Apple at 245.70 a share, would that have been a good move? Now, one thing we got to ask ourselves, right? As we're looking at this, and this is on the 1 hour time frame, and notice I'm kind of zooming in. Isn't it ironic that Apple started to take off? And let me see if I can draw this correctly. It started to take off when it hit the white line. And it's not necessarily the white line. It's that it got around these pivot points that showed us this is where institutions were moving. Is this helping somebody? So it's not just some random movement that's taking place. It's areas that we can look at, footprints on the chart, and we can see time in, time out. I mean, let's just go ahead and play this, right? We look at 243, went up, 244 went up, come back full circle, 246, 245. So in this area of the 245s, could we agree that institutions think that that's a good price? So let's see if we can put two and two together. If they think that this is a good price, perhaps this would be an area that we need to look at as retail traders and say it's something about these institutions at this price. Maybe I might need to do a buy limit or a sell limit here. So let's just say if we put this one in, right? Let's say if we said, you know what, I want to control 200 shares. And if I did, that's me tying up $49,000. Yep. And let's just say that I wanted to do a limit order, right? So I want to control 200 shares. Also in this 200 shares, I want to be able to take a profit at 253. So watch this. I can put my stop loss in place, and I can say if it hits 253, I am out of there. Does everybody understand this, right? So we don't just have to just take trades. We can put them in place. We can say when we take money, when we don't. And guess what? We can then do a market execution. Why would we take this trade? We would take this trade because of how deeply discounted it is. But watch this. We still never come and say we're going to be arrogant. We need to have a proper stop loss in place. So our red line would be our stop loss. Does that make sense? So if it comes down to 244, we are out of there. Now look at this trade we just got in. Normally, whenever you're trading, and this is just common practice, you will be in the red before you're in the green. So we're controlling 200 shares. We tied up about $45,000, $46,000. We want to have a stop loss at 253. That means we're out of there, and we can make a couple of $100 profit by being able to do so. So, folks, I'm going to go ahead and stop here. I just want to invite you guys, if you would like to come to a live training, I want to invite you to go ahead and apply for a seat. We're working with people that want to learn how to trade futures, learn how to trade indices, learn how you don't have to tie so much of your money together, but instead you can do this in a way that you can trade from what the market is producing, trade in less than 2 hours a day, and be able to get in and out of the market. So if you want to be able to do that, the link is in the bio, kdtinstitute.com/apply. Just a couple of questions just to see where you're at, and then we can point you in the right direction. We have a headquarters in North Dallas, Plano, Texas. But also, if you're in a different part of the states, different part of the world, we do virtual trainings via Zoom as well. And we would love to be able to connect with you guys. Okay? God bless you. Thank you for watching today. Have a blessed day. Thank you.